Hello everyone, welcome back. Today we are looking ahead to next week's key data and earnings reports. These factors may determine the market tone for the second half of August. Inflation data that could define the valuation ceiling, and 3 earnings reports that may affect the AI and consumer sectors. For US stocks, this is a critical week in which macro data can make or break the market. And it is also a transition stage in the Q2 earnings season, moving from tech-led earnings to validation from consumer and retail companies. Here's the conclusion first. CPI data will determine the direction of US Treasury yields, and Treasury yields will determine the valuation ceiling for tech stocks. Meanwhile, AMAT's earnings report may directly affect NVDA's next direction. 1. CPI, the most important macro variable next week. The most important data point next week is, without question, the July CPI report to be released on Wednesday, August 12th. The market currently expects core CPI to rise 0.2% to 0.3% month over month. Why is CPI so important right now? Because the US Treasury market has already awakened. The $30 trillion US Treasury market is the anchor for global asset pricing. As long as 10-year and 30-year Treasury yields continue to rise, the valuation ceiling for all high valuation tech stocks will be further compressed. After Microsoft rose to around $487, whether it can continue breaking above $500 depends not only on Microsoft itself, but to a large extent on whether CPI confirms inflation stickiness. If CPI comes in below expectations and Treasury yields fall, MSFT and AMZN may gap higher and break out directly. That would be a favorable window for current holders. If CPI exceeds expectations and Treasury yields continue to surge, tech stocks will face broad valuation compression. MSFT may pull back to the $465 to $470 range, or even test the core support zone at $450 to $455. But for investors holding cash, this may instead become a better opportunity to observe and enter. Therefore, the core strategy for next week is not to bet on the direction of CPI in advance, but to wait for the CPI data to be released and then make judgments based on the price reaction. 2. 3 earnings reports: BABA, WMT, and AMAT. In addition to macro data, 3 earnings reports next week deserve close attention. The first is Alibaba, BABA, expected to report before the market opens on Thursday, August 13th. Alibaba is a leader in China's e-commerce and cloud businesses. It does not have a direct one-to-one relationship with AMZN, but it can reflect the state of China's consumer recovery. If Alibaba's earnings beat expectations, sentiment toward Chinese ADRs may be lifted, which would also have a positive effect on overall risk appetite in US stocks. If the earnings miss expectations, they could create some indirect pressure on AMZN's e-commerce valuation. The key is to watch the growth rate of Alibaba Cloud, because it has some comparative value with the logic behind AMZN's AWS. The second is Walmart, expected to report before the market opens or during trading hours on Thursday, August 13th. Walmart is next week's most direct barometer of US consumption. If Walmart reports strong results and raises guidance, it would indicate that US consumers remain resilient, and the broader US stock market would receive some support. If Walmart clearly misses expectations, the market will reprice the risk of consumer downgrading. At that point, not only retail stocks would come under pressure, but AI and tech stocks could also be dragged down, because the market would worry that a weakening economy could affect corporate IT spending and then affect growth expectations for Azure and AWS. Walmart's earnings have the most direct impact on AMZN and an indirect impact on MSFT, but that impact should also not be ignored. The third is Applied Materials, AMAT, expected to report after the market closes on Thursday, August 13th. This earnings report may have the biggest impact on the AI sector next week. Applied Materials is a leader in semiconductor equipment. Its orders and guidance directly reflect the willingness of the chip manufacturing side to commit capital expenditures. AMAT's earnings report has a very significant impact on NVDA. Why? Because the biggest potential uncertainty in NVDA's fundamentals right now is not short-term demand, but the quality of orders and the sustainability of customers' financing structures. AMAT's earnings report and next quarter guidance can indirectly verify whether global semiconductor manufacturers are still actively expanding capacity. If AMAT's guidance is strong, it means the chip supply chain is still expanding, and concerns about NVDA's order quality will be eased. If AMAT's guidance is weak, the market will suspect that downstream customers may have started cutting capital expenditures, and NVDA may then face a second round of valuation pressure. What the market is focused on now is this. AMAT's data may reflect changes in the AI chip industry chain earlier than NVDA's own statements. Therefore, anyone holding or watching NVDA next week must pay close attention to AMAT's earnings report. 3. Impact pathways for the 4 stocks in the watch list. When these data points and earnings reports are connected, the impact pathways for the watch list next week become very clear. MSFT, mainly affected by CPI and WMT's earnings report. A lower than expected CPI would support a price breakout. A higher than expected CPI could cause the price to pull back to support. AMZN, affected by CPI, WMT, and BABA at the same time. CPI determines valuation, WMT determines consumer expectations, and the growth rate of BABA's cloud business can provide a comparative reference for AWS. JPM, mainly affected by CPI and long-term Treasury yields. If CPI is higher than expected and yields rise, JPM, as a beneficiary of higher interest rates, may instead have a relative advantage. ICE, also affected by CPI, but the key variable for ICE is bond volatility. If CPI triggers sharp volatility in the US Treasury market and bond trading volume rises, ICE may instead become a beneficiary. 4. Response strategy. The key principle for next week can be summarized in one sentence. Do not bet on direction before the data lands. After the data lands, look for price confirmation. Before Wednesday's CPI release, it is more suitable to maintain existing positions. Do not add positions, do not go short, and do not make a heavy directional bet. After CPI is released, focus on 2 scenarios. If CPI comes in below expectations and Treasury yields fall, then watch whether MSFT and AMZN can break above previous highs on strong volume. Only a breakout with strong volume would represent real strength. If they gap higher but then sell off, investors should instead be cautious about good news being priced in and sold. If CPI is higher than expected and tech stocks pull back broadly, there is no need to rush into panic. Instead, observe whether MSFT can stabilize on lower volume around $465 to $470 and whether AMZN can do the same around $270 to $275. Only stabilization there would show that the core buying/support zone has given a signal. After AMAT reports on Thursday, then decide the next step for NVDA. Strong AMAT guidance would ease concerns about NVDA's order quality. Weak AMAT guidance could mean NVDA continues to face a second round of valuation pressure. The earnings reports from BABA and WMT serve more as supporting validation. For BABA, watch the growth rate of its cloud business. For WMT, watch whether the consumer side can still hold up. These 2 earnings reports will determine whether AMZN's e-commerce and cloud business narratives can continue. 5. Summary. Next week's market can be summarized this way. CPI sets the valuation ceiling, AMAT sets AI confidence, and BABA and WMT set the consumer backdrop. 3 earnings reports and 1 data point will determine not only next week's market direction, but may also affect the overall market tone for the entire second half of August. Our strategy is not to predict, but to wait for confirmation. Before the data is released, do nothing. After the data is released, watch the price and volume reaction. A strong volume rally after good news is true strength. Stabilization on lower volume after a pullback to key support is a good buying point. The market never lacks opportunities. What it lacks is patience and discipline. This episode is for market analysis and risk warning purposes only, and does not constitute investment advice. Before investing, please make independent judgments based on your own investment horizon, position structure, and risk tolerance. That is all for today. We will see you again next week after the data is released.